Goodwill is an intangible asset that's unique in that it can't be separately identified from other assets, and it results when a company is purchased and the amount that's paid for the company is in excess of the net fair value of the value of that institution. So I can't have internal goodwill. It only comes when there's a purchase or acquisition of another company. And once again, it's the excess of the consideration exchanged over the fair value of the net assets. And this part is very important to remember when you're going through and looking at it. Here's an example of that concept with Smithson Corporation acquiring all of the outstanding common stock of Ryder in exchange for $18 million in cash. So the purchase price is $18 million. Smithson assumed all of Ryder's long-term debt, had a fair value of $12 million, and it also had identifiable assets that are listed below: receivables, inventory, property, plant and equipment, and patents. The total fair value of the identifiable assets is $25 million, and I'm going to subtract from that the fair value of the liabilities. So the net is $13 million. And since the acquisition cost was $18, I'm going to have goodwill of $5 million as a result of this acquisition. The journal entry to record this is to set up all of your assets at fair value, set up the liabilities at fair value, show the cash that was purchased, and the resulting difference is your goodwill. Now you have to remember that goodwill is one of those intangibles that is not amortized, and I'm going to be required to periodically check for impairment of the value of this goodwill. It usually relates to some intangible type of asset that we can't see, hear, feel, or touch that results from the acquisition, such as favorable business location or trained employees or good name recognition, etc. And so every year you're going to have to go through and see if the goodwill has been impaired. If so, you will recognize a loss on this impairment.